seen today with the S&P 500 is it closed above the June resistance swing high. This is a major deal for the S&P 500. We have been waiting for this moment for quite some time. Yes, we did see this, of course, on Tuesday. However, we did get the pullback on Wednesday. What we've done today is close above the closing price of Tuesday, and this is now the second time that we have broken above the swing high in the period of June. Why is this important? The reason why this is important is because essentially it opens up the door for this market to gallop very, very quickly on up to close this gap that we've been speaking about for months now, 2,852. If we get really any definitive movement above what we saw during today's session on Thursday, and if we do see follow through, the follow through could be very quick, it could be very abrupt, and even by next week, we could see the S&P 500 rallying all the way back up and closing this open window once again at 2,852. Now, what we didn't see, however, was the same sort of technical structure set up on the Dow Jones Industrial Average. You can see that, yes, we have had a series of three very interesting candlesticks. You can see Tuesday's candle just here, another continuation or signal off from Monday's candle. This is looking like that of a rising three pattern, relatively rare pattern. However, it did begin to break down with Wednesday's candlestick here. But as you can see during today's session, once again, we rallied. We were up very close at just over 206 points. Again, we've got 10 minutes left in today's session. But we are setting up a really odd type of pattern. This is technically very close to that of a Morningstar reversal. I'm not going to really call it that though, however, because generally we want to see these patterns at a support area as opposed to a resistance area. But again, you can sort of make the definition out just looking at these three candlesticks here. Very similar to the S&P 500 as to what I just spoke about. If we do see a movement, really a break of not only today's candle, but also Tuesday's candle as well, you could see this once again rally up to 25,330. Prepare for the Dow Jones Industrial Average to slow down at this pivot. This again is taking us back to the swing high in the month of June. But if we can clear this, we could see this not only close this, but close it very, very quickly, because the Dow Jones Industrial Average at this particular point and at this moment, when we start moving above this level, it's going to be playing catch up to the S&P 500 and also catch up to the Nasdaq. Now, the Nasdaq of these three markets, it is, I guess, the most indifferent. It is pushing back up to a new all-time high. This is quite interesting. I'm not all that excited, by the way, and I'm just going to say it right here, taking the 7,823 long trade at this time. At the moment, I am long in the S&P 500s. We spoke about this, or in the SPYs. We spoke about this over the weekend, above 2767, and how personally it was my favorite of the three market indices to actually take a long position on, just based on risk and reward, and really with some pretty decent sort of target levels, really defined target areas relative to risk. So personally, I'm in the SPYs, and when it comes to the Nasdaq, although you can, of course, make a very easy bullish argument above 7,823, I'm quite comfortable personally with just having that exposure through the SPYs. But if you choose to trade the Qs, that's all for you. You can make that decision, obviously, for yourself. I just wanted to make it very clear that for whatever reason, I'm not looking to jump into the Qs. The reason I say that is because even with this analysis here today and that written document over the weekend, we spoke about some technical signals, or at least some technical entries on some of the tech companies. And essentially what that does is just give us exposure anyway to the Nasdaq. And I just wanted to remind you that at the moment, the Nasdaq is not in agreement with the industrial average or the S&P 500. The reason I say this is because the Nasdaq, as I just said, is at a new all-time high, whereas the S&P 500 and the Dow Jones Industrial Average are still quite really significantly away from their respective resistance areas. And that resistance area, i.e. the gap, is what we're going to talk about in tomorrow's pro analysis class. We're also going to go back, historically back to 2015-16, and it'll just show you some of the parallels which are beginning to sort of shape up between these markets, between now, of course, and back a few years ago. So that's going to be relatively interesting too. When we have a look at our top 12 list, one of those stocks, of course, is Apple. Apple's still floating above 188.91. You saw a little pullback yesterday to close the gap. We're starting to see buyers show back up. If I bring up the exponential moving averages, you can see that they are holding as support. And the good news also is that if I bring up these oscillating indicators, they are technically giving us support as well. They are relatively bullish. You can see the MACD's just crossed most recently. The RSI is adjusting, and the Stokes is pushing on back up into overbought territory. We still have quite some distance to go. Obviously, I just wanted to remind you that we do have earnings scheduled for later this month, and this is really for the majority of stocks in our top 12 individual traders. So we're going to have to navigate these waters, but it is rather timely as well. Now, Amazon went rather ballistic today, up $39.85. You can see it breaking above 1,782. This came as a little bit of a surprise to me. I missed out on Amazon today. I didn't have the trigger open. I have been monitoring this, but at the same time, I've been very cautious around this pivot up here. But I do have a few emails of people who've entered into this, and they are rather happy. So I congratulate you for taking that Amazon breakout trade. Very similar, of course, to how the Nasdaq is positioned at the moment. I wouldn't be all too concerned whatsoever about this trade. There's no reason to be at this time, especially with the markets acting the way they have today, and with the SP 500 breaking above that June swing high. Outside of that list, though, I can just quickly make my way down the screen. Boeing Airlines largely just simply moving sideways. It really isn't as lively as what Amazon and Apple are at the moment. You've got Baidu taking off to the upside, up $10 today, which is quite interesting. Again, we've been battling with the idea of, well, is this going to be that of an ascending triangle? It looks to be, especially if we do see a bit of a slowdown, who knows, an actual roll and then a definitive closure of this gap. And then who knows, we might get another oscillation back up into this resistance. If we see this, you have to be prepared for the Bollinger Bands to squeeze price. Now, that's going to set up a bidirectional trade setup at some later date where we can just simply bracket the trade moving forward. But at the moment, I would not be looking to trade this long. The reason for that, one, is we have earnings scheduled later this month, but also if you look back to this swing high and of course this gap over here, you've got multiple areas of resistance. Imagine that of a red rectangular box on Baidu, very similar to what I've been speaking about with COP recently, where we've got a ton of resistance, both horizontal and of course bearish trendline resistance, and also all-time high resistance too. So you can see how this is just simply chopping and moving sideways. Caterpillar doing the same thing. We are still technically holding below support, but we haven't really seen the follow through to the upside, nor have we seen another secondary push to the downside, which would be very interesting and potentially a very nice buy signal if we do come on back down to this bullish trend line. So I'll give you an update in that in more detail over the weekend. We have CVX. What did we speak about this over the weekend, and what did I write? Should be moving sideways, forget about it. And we've really been sort of justified in that analysis. You can see that we are still entering into a Bollinger Band squeeze, but at the same time, there's no guarantees that this is going to break on Friday. And this has still got further to squeeze. The more I look at this, you can see that the actual lower Bollinger Band is largely moving sideways. That top band is sloping down, which is good. But what we want to see is a little bit of a bounce here, and then this bottom band turning up. So then we get both the upper and lower Bollinger Band really constricting price. That is when we know that the trade is ready to move. For the time being, we can simply just move sideways until that really shapes up and begins to take hold of the chart pattern on CVX. We've got Google taking off again to the upside. This is interesting because we're back up very close to a new all-time high. You've got a couple of wicks over here. Intraday session pushes high, not only on this date in June, but also taking us all the way back to the top of the market, largely in the month of January as well. So this has been a historic target for us in the past, 1,189. Most recently, we traded this from 1151, took the bullish swing up to this resistance area, liquidated the trade. Then, of course, we've come on back down. We've retested essentially this backward or sort of bearish trend line here, and we've just moved parabolic again. So this is considered volatility here. It's anyone's guess whether or not we're actually going to break out. I'm not going to place the trade at the moment at 1204 on Google. I do not have this open in my account at the when I say this, I'm quite happy with, again, limited exposure. Rather, or I should say, playing defensively still with this market, the temperament of the market, the sort of volatile state of the market, the rather sort of unpredictable nature as to what we've been seeing over the past number of sessions, if not weeks. And because of that, what I'm not willing to do is really allocate, or at least over allocate capital into the markets at this particular point. That will change when the markets move back into synchronicity and we can get behind more sort of a stronger technical backdrop. But at the moment, I would encourage you to really be strategic in your entries and really cherry pick the trades that you want to leg into. Of course, you need to do risk and reward analysis. And also on top of that, you need to understand obviously what your capital size is in your account. You have to reverse engineer those options to make sure that you're essentially jumping into, or at least obeying, money management rules as well, which is very important in the world of analysis and trading financial markets. No matter what fractal or what vehicle you use to actually trade financial markets, there's no point jumping into Google if you have a rather small account, because again, it could be a very good outcome. However, on the flip side of that, it could almost blow up your account very easily too. So remain vigilant. I still encourage people to be defensive at this particular moment, and we may have to stay a little defensive until we can persist through earnings. Now again, IBM is getting very close to earnings. As per my software, it says Wednesday next week. This is still bound to change, or it probably will change between now and then. If you are in IBM, I would encourage you to simply get out of this. Just be done with it. We'll move through earnings, then we'll trade the gap in due course. Netflix today, it didn't really participate like we saw with Google. You can see that it looks as though, however, we are setting up a stair-step consolidation, and technically this is healthy, especially near a all-time high. But at the same time, we still have an absolute plethora of bearish signals as well. So we're sort of mixed on Netflix. I won't have a problem whatsoever trading this long. Over the weekend, I'll speak about it. But there are signals to be cautious of and to be wary of. And I think we may have to wait until we move through earnings, which again is scheduled for Monday the 16th, until we get a clearer picture. That is the first session upcoming. So I wouldn't be looking to gravitate or jump into a trade on Netflix on Friday. And then to round out today anyway, we've got Tesla down, kicking the trend once again. This is weak. This is looking like a bear trend, or at least a bear flag formation, which could potentially break to the downside. It may still bounce a little bit further. At the moment, I'm not looking to jump into this bullish or bearish, just allowing this to shake out and looking for a better opportunity. If you wanted to really sort of be aggressive in a trade, you can place it below the low of this candlestick just here. This is Thursday, the 7th of July. Oh, sorry, the 5th of July. Outside of that, though, I'd simply leave Tesla for the time being as well. Okay, so that's going to do us for this Thursday afternoon market recap. I wish you all the best, everyone. If you have any questions, please email me, success@pivotpoint-trading.com. Until next time, though, I will see the majority of people in that analysis class, that Pivot Point Pro analysis class on Saturday. All right, all the best, everyone. Enjoy your Thursday evening. Goodbye.